Welcome to Turning Hard Times to Good Times. I'm your host, Jay Taylor, talking to you from New York City on this, the 29th day of June, 2021. And we do want to thank all of you for listening to this show, making it one of the more popular shows in the Voice America Business Channel, and also encourage you to send along whatever comments you have about the show to questionsfortaylor@gmail.com. We also want to thank our sponsors for making this show economically viable. Our sponsors for today's show: Novo Resources, Sitka Gold Corp, Eloro Resources, Irving Resources, Hannon Metals, Lion One Metals, SK Mining Corp, NV Gold Corp, and Firefox Gold. I've titled today's show Monetary Climate Change and Gold. Peter Stöferle and Dr. Quinton Hennigh return as my guests this week. The Fourth Turning, a book written in 1997, predicted that during the mid-2000s, major social, economic, and political changes would occur in the United States. The 2008 financial crisis was followed by the election of Barack Obama. In my view, those events have indeed marked the start of America's Fourth Turning. Fourth Turnings always bring major social and political change. And so we now see BLM and Antifa clamor for Marxist rule, and many, if not most, Democrats and the intelligence community seem to be in sympathy with those aspirations. Lenin said that the best way to destroy the capitalist system is through currency debasement, because by so doing, governments can confiscate wealth secretly and unobserved from an important part of its citizenry. Whether these forces destroy all that 1776 bequeathed to Americans, only our Creator knows for sure. But if currency debasement is the best way to destroy capitalism, America is well on its way toward that end. From the 2021 edition of In Gold We Trust, co-author Ronald Stöferle will explain in the second half of today's show why he believes the U.S. has reached a tipping point where inflationary forces have begun to dominate. But the one thing that remains unchanged and secure as long as this world endures is the purchasing power of gold. Thus, the need to own it and shares in the companies that produce it, especially in times like these. That premise is, of course, tested from time to time in the short run, as it is now with gold's recent decline of more than $200 an ounce. Michael Oliver is not with us today, so I thought I would take a look at some of his most recent comments on gold, just to see and reassure myself that there's nothing too much to worry about. On his June 22nd trend sheet report, Michael stated unequivocally, and I quote, "The annual momentum trend is positive and that it is likely that the intermediate downtrend correction low of March of this year will hold," end of quote. I took a look at the March lows, and the cash market, it was 1687. At about 2:30 this afternoon, the gold price was comfortably above that level at 1764. Michael pointed out that this recent decline of more than $200 per ounce came on the heels of the Fed chairman's recent Federal Reserve talking points. Then on Michael's weekend 360-degree report published this past weekend, he noted that while the quarterly momentum charts of the stock market are in distinct jeopardy of breaking their action to the downside, from a momentum perspective, the two alternatives to equities, namely gold and treasuries, have shifted in the opposite direction. In other words, heading high from a momentum point of view. Michael pointed to a weekly closing number for gold of $1,864 during the next quarter as a secondary positive for a likely next move higher, now that the downtrend momentum channel has been broken to the upside. While this 200-plus gold price decline has been painful for those of us with large gold positions, I see it as a marvelous buying opportunity for solid gold and silver mining companies and exciting exploration stocks like SK Mining, which is on to a gold and silver-rich VMS discovery that appears to be a carbon copy of one of the highest grade mines in Canadian history, that being the great SK Creek mine just north of where SK Mining is beginning its 2021 exploration season. There are many other companies as well that are sponsors of this show and many others that I cover in my newsletter that are certainly exciting stories, evolving exploration success stories that are making their investors a lot of money. And I certainly hope that some of you would consider subscribing to my letter because this is a very exciting time. And quite frankly, I think when we see declines like this, it's a good time to consider entering the gold share and exploration markets. We do have to go to a commercial break now, but don't go away because when we come back, Dr. Quinton Hennigh will be with me to talk exactly about SK Mining and the very exciting story that is unfolding there. They have now started their 2021 drill program, and so I expect over the next several months we're going to have a lot of exciting news coming from SK Mining.